Good morning, everybody. It is Monday, July the 20th. Here's what's on the agenda. Brent goes back over $90 a barrel on escalating military activity in the Middle East. RyanAir profits hit by higher oil prices, and we're live at Farnborough Airshow. Plus, Andy Burnham set to enter Downing Street today as UK Prime Minister. Those are your headlines. What does that do to the market situation then? Well, this is the over $90 picture I was talking about on Brent. We're at 90.66, up by 2.9% this morning as that tit-for-tat between the US and Iran continues. European gas futures also moving higher, then up by 5%. So we have the whole energy complex very much in focus, and we increasingly once again talk about inflation and what that does to the inflation narrative in Europe. What does it mean for stocks? Well, stocks have been focused not necessarily on the Middle East. They have that now to contend with, but also but really focused on the AI trade. Now, we've been asking questions recently about Chinese competition. Those questions still remain, but still we see that US futures managing to eke out some gains this morning after last week's losses. And so European stock futures are pretty subdued this morning. The countdown to the opening trade starts right now. Welcome, everybody, to the opening trade. Then let's get to our top story, which is around higher oil prices. The US and Iran have traded fresh attacks over the weekend, with Washington announcing a third troop death in 2 days. Tehran says it will no longer adhere to the terms of the peace deal, the MOU, while President Trump says the conflict is about ending Iran's nuclear ambitions. The response to that in markets, then, Brent Crude has jumped after the US and Iran escalated their hostilities. Let's bring in Stephen Sapczynski for more, who leads our energy coverage over in Asia. And Stephen, so that's the backstory. That's the escalating tensions, still tit for tat. Iran stepping away from the MOU, we understand. How are these latest escalations then affecting the flow of energy through the Strait of Hormuz?
I mean, we've seen another day, it's been over a week of this, basically, of essentially no traffic, at least none with their transponders on, going through Hormuz. Of course, there is some dark traffic, but overall, anecdotally, and what we've heard from traders, seafarers, and captains themselves, is that there is a caution around going through the strait. And there's good reason to. Iran says that they basically turned back four vessels out going through the Omani route, one of which might have been struck and maybe was damaged, according to some reports. That means that there is still a live danger there in the strait, and ships, exporters, and captains will really have to think whether or not to go through that waterway, which is why you've seen that reduction in flows, and that's creating some anxiety in the market. Likewise, over the weekend, there has been broader attacks. Before, we were really seeing some tit-for-tat attacks on military infrastructure of U.S. allies that have bases, or of Iranian infrastructure. But now we're seeing that kind of expand larger to energy infrastructure to a degree. Kuwait's infrastructure has been, and assets have been targeted for the last few days. And there's just a general fear that this is going to spiral back to where we were in March, where Iran was successfully hitting refineries, pipelines, and other types of energy assets, oil and gas assets, with missiles and drones that were causing real damage. If that is the case, it's no longer a story of how quick it will take to open up Hormuz. It then becomes a story of how quick does it take to get these facilities back online and potentially repaired.
Stephen, thank you very much. Bloomberg Stephen Sapczynski there with the latest on the energy markets, and more on the energy theme as we go through the programme. Oil prices then up by just shy of 3% at 90.72 on Brent. Well, these rising energy costs will certainly be one area of focus for Andy Burnham, who is set to become Britain's Prime Minister this morning. He'll be inheriting a cascade of other challenges that have felled his predecessors, with a number of outstanding questions about his cabinet and policy direction. For more, let's bring in our Daybreak Europe anchor, Lizzie Burden, who we've seen already is outside number 10. She's in Downing Street for us. Lizzie, tell us what we should expect today.
Well, Anna, we are just waiting for Starmer to be out, Burnham to be in. I feel like this door behind me should be a revolving one. He's going to be the 7th Prime Minister the UK has seen in a decade, and it has been a remarkable journey. Let's just remember, he is the former Mayor of Greater Manchester, now Makerfield MP and leader of the Labour Party, but he is the first person to be going from outside the Commons into Downing Street. since Alec Douglas' home in 1963. He's the 11th of the past 19 British Prime Ministers to take office without an election. He's going to be inheriting a working majority of 166 MPs, and 90% of those Labour MPs backed him to become Prime Minister. So today we're going to expect the same choreography that we've become all too familiar with in recent years. Starmer will be giving a farewell speech here outside Number 10 late morning. Then he'll go to Buckingham Palace to tender his resignation to King Charles. Once that's accepted, the King will formally invite Burnham to form a government, and then Burnham will be back here to give a speech setting out his core objectives, and then the cabinet ministers will start filing in. We'll start to find out who his top team will be. The key question, of course, for markets is, will Shabana Mahmood be confirmed? She's currently the front runner to be Chancellor, so we'll watch for a gilt and sterling reaction.
Absolutely, yeah. 55 minutes until we get to gilt markets opening up. Lizzie, thank you very much. Bloomberg's Lizzie Burden, of course. And let's look ahead to what else we are watching then throughout this week. It's going to be a busy week on a number of fronts. UK politics to the fore, as we've just been hearing. Andy Burnham is set to be sworn in as the UK Prime Minister. Plus, the Farnborough International Airshow gets underway. Both of those very much on our agenda today. Tomorrow, we will be getting UK unemployment data and Germany's ZEW survey, so some macro indicators. That continues on Wednesday, where we get UK CPI and bumper earnings. And we really are going to see a lot of tech companies reporting in the States. Tesla and Alphabet are two on Wednesday that we focus in on. On Thursday, we get an ECB rate decision. And on Friday, European flash PMIs plus UK retail sales figures. I mentioned that Farnborough is a big area of focus. And of course it is. And Guy Johnson is there for us. It is where the world's leading aviation companies are gathering today and this week. The event comes as the industry faces significant challenges, from geopolitical instability to rising cost pressures, topics that we have talked about many times, Guy, on this very programme. Guy, good morning. So what can we expect from the event?
Well, let's draw a line through some of the stories you've already been discussing, Anna, and talk about how they're going to impact what we're going to see here at this show. The economy globally generally looks good, but oil prices are rising. That directly affects the airlines. You can see that in the RyanAir numbers this morning, which have been impacted by the higher oil price. Neil Sorahan was on our air a little bit earlier on. So are airlines going to be confident enough to continue to order aircraft? That is one of the key tensions they're going to be watching out for. Airbus and Boeing will be paying a great deal of attention to that. But then you bring up the issue of what is happening with Andy Burnham as well. Andy Burnham comes in with significant pressure on him to boost defence spending. How is he going to finance that? That's one of the key questions as well at this show. How does Europe finance its defence build-out, being pushed, of course, by Trump? How does it do that? And can it do it with European kit? Or are the big primes like Boeing going to be required in order to make that happen? That is going to be, again, one of the key questions that I think people are watching here. So big questions on the civil side. What happens with the oil price? What happens with consumer demand? What happens with inflation? And then you've got this defence build-out, this tension within European balance sheets. Can they finance that story going forward? And how do they get the kit they need in order to defend Europe? That's going to be one of the key questions that we're going to be talking about, and we've got some great CEOs lined up. We're, of course, going to be talking to the Boeing CEO, Kelly Ortberg, very soon. His first Farnborough, really looking forward to this conversation. We'll talk to the opposition a little bit later on, Airbus, in the form of Guillaume Faury. But we've got some great guests lined up throughout this airshow, Anna, to ask these key questions that I think the aerospace story is right at the centre of right now.
Yeah, absolutely. Aviation providing that thread, as you say, between some of these stories we're dealing with, Guy. And often at these air shows, we either see a focus on the civil side and plenty of orders coming through for the aircraft manufacturers, or we see an emphasis on defence, and maybe the former has been in the driving seat in recent years, but maybe the defence takes centre stage. What do we think the big takeaways from this event are going to be?
Well, it's going to be that story around whether or not Europe can rearm on its own. Normally, there is a big defence event similar to Farnborough that takes place here in the UK. That's not taking place this year because of operational reasons relating to the war with Iran. That's going to put a greater focus on this show in terms of the narrative that comes out of the European defence sector. But the big primes out of the United States, they're going to want to be part of this. How do they make that happen? How does that relationship work between Europe, that is worried about its relationship with Washington right now, but needs some of the kit that these big companies are going to be providing, Anna?
Yeah, absolutely interesting to see that relationship between those big primes and the new startups then. Guy, thank you very much. Bloomberg's Guy Johnson, of course, on the ground for us in Farnborough. Our on-the-ground coverage from Farnborough will continue. And as Guy was talking about a moment ago, he'll be talking to some of the biggest players in the industry, of course, including Boeing CEO Kelly Ortberg and the Airbus CEO Guillaume Faury. Coming up on this programme, then, we will continue the focus on aviation. RyanAir's profit takes a hit from higher oil prices and softer travel demand. We'll bring you some of my conversation with the CFO of RyanAir, Neil Sorahan. I spoke to him in the last hour of programming. We'll get another chance to listen to that. Plus, Andy Burnham set to take over as UK Prime Minister today. We'll discuss what to expect from his new government. Up next, we'll be joined by Simon French, Chief Economist at Panmure Liberum Capital. He has plenty of ideas about where the focus for Andy Burnham should be as he comes into Downing Street. If you want to get involved in any of these conversations, we do like to hear from you. IB plus BBTV Go is the function to use on the terminal. This is Bloomberg. Welcome back. 14 minutes past 7 here in London this Monday morning. The futures picture, it looks negative, but flat to negative, I guess I'd say. US futures actually have paired some of their earlier gains. NASDAQ futures just into positive territory, but pretty flat compared to some of the volatility we were seeing last week. But things deteriorating in the last half hour, so we will keep an eye on this futures picture. Now, talking about UK politics, as we've done already this morning, let's return to that theme. Andy Burnham is set to become the UK's 7th Prime Minister in just over a decade. That's today. Along with the new role, he'll face a raft of tricky issues, of course, including a renewed, ongoing focus maybe on immigration, contending with an unpredictable US president, reinvigorating Britain's stagnant productivity. Joining us now, Simon French, Chief Economist and Research Head at Panmure Liberum. Really good to have you with us, Simon. You've got plenty of experience actually within politics and then from the outside looking at it from as an economist. If we take we're going to be talking a lot about the policy initiatives that are very short term, I'm sure, over the next weeks, in fact, maybe even in a few minutes. But let's start with some supply side reform and whether we have any appetite for that. Mark Carney, when he was at the Bank of England, used to talk about the sort of speed bumps in the UK economy that meant we just so quickly ended up in inflationary territory. And I wonder if there's anything that a government, incoming government with new ideas can do to try and change that situation.
So I think both the Andy Burnham administration and the Keir Starmer administration have both diagnosed the problems, at least rhetorically. On the steps of Downing Street, Keir Starmer, just over 2 years ago, talking about treading more lightly on people's lives. That talks to supply-side frictions. Then Andy Burnham, in his comments this morning, talking about breathing space. Well, breathing space, that channels the cost of living. But, of course, cost of living matters in real terms, adjusting for inflation. So I think the Mark Carney diagnosis, your diagnosis, is absolutely right. I think the government, at least rhetorically, have diagnosed it. But I think you speak to the problem, which is, have they got the political backbone, the patience for some of these long-dated reforms? Because these are policy failings over decades, arguably, in the UK economy. Yes, we've had the most recent friction to trade through Brexit and frictions through our biggest trading partner. But frictions to the energy market over the last 2 decades have made UK industrial electricity the most expensive in the world. Planning is a long-dated problem, the pace and the cost of approval. And then you think of also, most recently, the labour market, adding in frictions through employer national insurance, the Employee Rights Act, and the national living wage. That's a big cocktail for employers to absorb. Put that all together, and international investors looking at UK assets are assuming higher inflation than the Bank of England's mandate. It's averaged 3% over the last 2 decades. So there's a 100 basis point premium existing on gilts as a result of just rational expectations that inflation over the last 2 decades will continue to run above target.
So these are some of the fundamental problems that the UK economy faces, Simon. Yes. And so on a day where we're going to get we expect a new Chancellor named, we would ask, well, what clues do we have about their stance, about whether they are interested in fixing any of these? The most likely name, we're told, is Shabana Mahmood, and we don't know very much at all about what she would intend with regard to the UK economy. We don't know if that's by design. But do we have any sense of where she would sit in the sort of panoply of options in front of Andy Burnham?
Well, I was struck by the comments at the back end of last week when rumours reached trading floors around London that Shabana Mahmood was now the favourite. And we've had Wes Streeting, the previous Health Secretary, as favourite briefly on markets. Then we had Ed Miliband, the current Energy Secretary. And each time you had a little bit of an indication of what they thought about economics. Shabana Mahmood, you're absolutely right, has said almost nothing publicly during her time as a politician, and certainly as a frontline politician, where she's done the Justice and the Home Office brief. And therefore, you might suggest that that's something of a blessing, because actually she can go into the Treasury with something of a blank canvas, not any preconceived public positions that she's got to reverse out of, and listen to advice. Because I do know, the advice that comes on day one to a Chancellor, it'll be extensive, it'll identify all these problems. Will she be prepared with a, no ideological positions that of note to actually listen to that and make some of those tough decisions we were just speaking?
What we do know about her is when she was the Home Secretary is that she has an ability to take on parts of the party, doesn't she? To be quite radical, I suppose, from within the party's perspective. And then I wonder about welfare reform, and this has been something that Keir Starmer was not able to get through, and I wonder whether that's something that she can progress with, given that background.
I think that's right. I think the ability to take on immigration, a position which certainly wasn't native to her party, wasn't supported by her party, does that point to a politician who will address an issue which is very difficult for the Labour Party? But I think it's not all of the welfare budget. So often this is all grouped together.
Yeah, a lot of it's pensions.
Correct. Of the £340 billion, half of that is pensions. Another half of that is by international standards not high in terms of proportion of GDP, not growing particularly fast. But there is a subset of welfare, particularly since the pandemic, particularly some of the additional costs associated with something as personal independence payment. It's a particular benefit. That's growing very, very fast. And the degree to which that is decoupling from what we know about the underlying health of the population feels like an area ripe for reform. I think the question for Shabana Mahmood is whether she can take the evidence base, which a former Work and Pensions Minister, Stephen Timms, is putting together in the form of the Timms Review, present it to a party and say, look, this may not be ground you want to fight on, but it's important for our optics in terms of good stewardship of the public finances.
OK, well, that's interesting. We'll wait to see if she is confirmed. We don't know yet, do we? What about renationalisation of utilities? I mean, we have heard Andy Burnham talk about water. Others have been talking about energy and transport, and he's talked about what he's done in Manchester in that regard before. But I wonder if there are lots of grey areas between the privatised businesses we have right now and full renationalisation, and I wonder what creative solutions are being thrown around Westminster right now. What do we expect to hear?
Well, Manchesterism, which appears to be the sort of ideological envelope that Andy Burnham is aligning himself to, suggests that actually there is a cost of lack of control, not ownership, but control from the state, and therefore can, if you look at two binary outcomes, privatisation or nationalisation, there'd be a kind of third way. It all feels a bit Blairite, doesn't it? But a third way where the state coordinates all those actors who are involved in the provision of utilities, of housing, of energy, and say, actually, we can strip some of this away, which actually does feel, to our earlier conversation about supply side reforms, quite reformist, and say a bit more of coordination, central coordination from central government in order to reduce costs, accelerate the pace of deployment. The other part of Manchesterism from a financial market standpoint is whether actually the cost of capital provided by the state sector versus the private sector is cheaper. The problem, I think, here with Manchesterism is this was designed at a time, or ideologically attached to at a time when there were zero interest rates for governments around the world. We're not in that time. I mean, this audience know we're not in that time, and we don't seem to be going back to that time anytime soon. So that, if you like, financial arbitrage between the cost of public sector finance and private sector finance has closed up. I think that is an undermining feature of Manchesterism that they're going to have to address, because the compelling argument of taking it back into some form of state ownership, not full nationalisation, is somewhat diluted by that.
That's really interesting. And one of the other elements of Manchesterism, if we know much about what it is, seems to be very much about cooperation between the business world and the public sector. Is there room for that to really deliver any difference, do you think, at the national level, Simon?
Well, it'll require trust, I have to say. I mean, businesses were told quite an upbeat story by Starmer and Reeves heading into the 2024 election, and whatever one thinks, there's lots of big words bandied around, actually quite small words, about lying. I don't think Starmer and Reeves were lying per se, but certainly a lot of business leaders feel they were misled, let's say, about the nature of the plans of the Labour government and how they would tax businesses. I think to restore that trust that Andy Burnham is going to be in partnership and there's going to be a fair balance of responsibilities with business, I think he's going to have to do a charm offensive. He's talking about a summer listening campaign. Is he going to be listening at doorsteps or is he going to be listening in boardrooms? I think that's an interesting question.
Well, yes, we'll watch that then. I mean, he clearly has a lot of empathy with former industrial heartlands of the UK and the way that voters in those areas feel and the stories that they tell. And then he talks about reindustrialisation and a lot of devolution. Do we expect that can devolution make a huge amount of difference here? Can reindustrialisation be something that the government plays a meaningful role in? I mean, some years ago that might have been, it would be easier to dismiss, but now we live in a world where governments are playing more of a role in economies.
I think the international context which you allude to is absolutely the right context to look at this. Governments around the world, particularly headed, you mentioned earlier in the conversation, Mark Carney. In Canada, Mark Carney's time previous to being Prime Minister was very much a globalist. He's now actually quite, looking at national interest first, the interests of Canada. The context of Donald Trump looms over all of this. But take this in two parts. On the industrial policy for regions, I don't think there's any path to reindustrialisation in the UK that doesn't involve lowering energy costs. I think energy is absolutely central to all of this. The barrier, though, to devolution, I think is more perhaps theoretical, ideological, the structure of giving powers to, I think, with the metropolitan mayors in the UK, 14 of them, will they be given devolved powers? They may get the powers. What will be their responsibility should they make financial bets that turn sour? I think that is the big question for anybody looking at this, is if you're going to give out responsibilities, fiscal responsibilities, will you allow local areas to fail if those decisions are poorly made? Or is actually the Treasury going to be the insurer of last resort? Unless you address that big elephant in the room, we're not going to go far on regional devolution.
Simon, thank you very much. Thanks for joining us. Really good to get your perspective this Monday morning. Simon French, Chief Economist and Research Head at Panmure Liberum Capital. Here's what else you need to know then this morning. Chinese startup Moonshot AI has told investors it plans to go public within 6 months after its latest model challenged perceptions of US leadership in artificial intelligence. Bloomberg understands the company has officially distributed the shareholder resolution to its investors, seeking the blessing of its backers for a Hong Kong listing. The company is wrapping a fundraising round that may value the 3-year-old startup at more than $30 billion. At least one person has been killed and 16 wounded in what Ukraine has described as Russia's largest ballistic missile barrage on Kyiv since the invasion began. Ukraine's foreign minister said around 4 dozen missiles targeted the capital overnight. The attack follows Ukrainian strikes on Russian logistics facilities that authorities said killed at least 7 people. And Spain are the Football World Cup champions after defeating Argentina 1-0 in extra time, with substitute Ferran Torres scoring the decisive goal in extra time. Spain dominated possession as Argentina struggled to muster a meaningful attack in what could be Lionel Messi's last World Cup match. So that's the football. Perhaps they're thinking at number 10 Downing Street what could have been on the football front. But moving on to UK politics. Today, very much in focus. We are in Downing Street. Lizzie Burden is in Downing Street for us as we watch for that handover. Keir Starmer will depart. He'll go to see the King. And then Andy Burnham will also go to the King and come back to Downing Street. And we will no doubt hear from him later all about his priorities. How much will they be shaped by the cost of living pressures, something still very newsworthy in the UK? With that in mind, coming up, as oil prices continue to head higher, we will get the latest from global energy markets with Goldman Sachs' Samantha Dart. That global conversation about gas, oil, diesel prices, all of that coming up next. This is Bloomberg. Welcome back. This is the opening trade. 30 minutes from the start of that opening trade then of cash equities. And this is the picture for futures then across Europe. It looks pretty negative this morning. We saw something of a negative sentiment around the tech trade last week, certainly around Chinese competition, in particular around AI models. What was that going to do for demand for tokens, for demand for memory, for demand for AI capex? And so all of that added up to negativity last week. Are we still dealing with a bit of a hangover of that here in Europe? Because looking ahead, US futures look pretty flat, actually, as we wait for the next catalyst, perhaps, around the US tech trade. And we'll get lots of tech earnings this week. Back on macro themes, we're dealing with a higher oil price this morning, over $90 a barrel on Brent, 90.76. And so that means that bond markets are once again focused on that inflationary dynamic. And I'm looking at the 10-year horizon across European bond markets this morning, and we are seeing that we're seeing yields higher by 2-3 basis points across the 10-year tenor across Europe, up by around 2 basis points at the short end of the French curve, I can see. So it seems from the short end to the longer end, we are seeing slightly higher yields this morning. But let's get to the source of this renewed inflation concern. The US and Iran continued to trade strikes over the weekend, with Washington announcing a third service member's death in 2 days, taking the total to 17 since the war began. Tensions show no sign of cooling as President Donald Trump reiterates his stance on the war's goal.
This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. So it's really not the same thing. What we're doing now is we're ending any chance where they could have a nuclear missile.
Let's get more then with Bloomberg Managing Editor for Middle East and Africa, Paul Wallace, who's with us this morning. So are we saying, Paul, this morning that the peace deal is effectively dead, whether that's the Memorandum of Understanding or the talks on a wider deal? The Iranians have said they're backing away from the MOU, but we haven't seen a return to the extent of attacks that we saw some weeks ago. So where are we at then when it comes to Iran and the US?
Hi, Anna. I think it's right. We've certainly seen a big escalation in the last 2 weeks or so. We're not back to the height of the war in March and early April. That's for sure. But things are certainly a lot worse than a month ago when we just had the signing of the MOU. I'm not sure if you can say that the MOU has been ripped up and is history now, but certainly at best it's suspended, if you like. This war now centers on the Strait of Hormuz, and the two warring sides, the main warring sides, Iran and the US, cannot move ahead with talks about Iran's nuclear program and talks about a permanent peace until they resolve the issue over this waterway. Now, the US says that its strikes, and it's now struck Iran for 9 straight days, are about reopening the waterway and getting Iran to stop attacking ships transiting through it. Iran, as you mentioned, shows absolutely no sign of backing down. It's counter-striking against the US strikes by hitting places like Kuwait and Bahrain and Jordan. And these counter-strikes are getting worse. You mentioned the death of the 3 US servicemen in the last few days. Another one is missing. So that just shows the extent of things. And the US too. The US has killed tens of people. I think over 50 people in sort of the last 10 days, according to the Iranian government with its airstrikes on the country. So things at the moment look like they're getting worse. They doesn't seem any sign of easing at the moment.
Yes, so we're in this situation then, Paul, where the tit-for-tat exchanges do seem to be escalating. I suppose there is room for further escalation. What is thinking like in the region? I know some of the Gulf countries have been speaking out over the weekend.
Yeah, it's a very worrying situation for them. I mean, Kuwait, for all we're not back at the to things as they were during the height of the war. It's probably already there for Kuwait. Kuwait is getting really battered on a daily basis now. But and Bahrain to a certain extent, Jordan too. But for the other countries like Saudi Arabia, the UAE, Oman, and Qatar, it's not quite normal, but it's still it still might as well be normal. But there's a lot of wariness now that we could get much more intense hostilities and perhaps a return for the region as a whole to sort of some all-out war where Iran is once again firing thousands of missiles and drones at them. That's by no means inevitable, but that is a possibility. Donald Trump is saying that he's going to keep escalating the US nightly attacks on Iran until it relents on Hormuz. And as we keep repeating, Iran shows no sign of doing that. And of course, you mentioned inflation as we moved into this hit, and energy markets are reacting rapidly to this. And Brent's back above $90 a barrel. U.S. gasoline prices, pump prices are back to $4 a gallon. So it's a worrying situation, for the global economy as well.
Paul, thanks very much. Bloomberg's Paul Wallace there with the latest on developments in the Middle East. And let's go on very much to the conversation he was steering us toward, which is around energy. As the Iran war escalates, oil continues to climb, reaching its highest level in more than a month. Here to discuss, Samantha Dart, co-head of Global Commodities Research at Goldman Sachs. Samantha, nice to have you here in London. Thank you for coming to see us. So let's start with the very much here and now story in markets, which is $90 oil. So we're back at a 1-month high, up by another 3% in this morning's trading session. What are your expectations, or how difficult is it to have expectations around where the near-term oil price is heading?
Yeah, I think it very much depends on the flows. And we did see a pretty significant drop in the visible exports from the Persian Gulf. I mean, to be clear, it's not always transparent. There are crossings that we don't necessarily see. But based on what we can see of exports from the region, and here I'm including not just the crossings through Hormuz, but also the reroutes via pipeline. We were, before this latest escalation, we had reached about 80% of normal, and now we have dropped slightly below 50% of normal. So the direction of travel is one of tightening. So yes, absolutely, this increasing prices can continue while this lasts.
Yeah, it's kind of amazing that we've got back up to 80% of normal levels, really, isn't it? With so few visible transits of the Strait of Hormuz. I mean, how much of that was, vessels with no transponder, and how much of that was pipelines or even carrying things by truck regionally? What are the ways around Hormuz that have been developed that have made the most difference?
Oh, absolutely. We saw, so from the Saudi side, the East-West pipeline played a big role in that, but also the UAE with the pipeline flows to Fujairah. And then we also saw some additional loadings in the Gulf of Oman that we think are also Hormuz crossings that we cannot see. So if you add up what you can see through the strait, it's not consistent, it doesn't quite match the loadings that you see. So we think those are crossings that are dark, we can't necessarily see. But when they are then delivered somewhere else, we can track the delivery. So we know that it's the total volume is a little bit higher than what we can actually see crossing.
Iran is continuing to try and exert control over the whole Strait of Hormuz and suggesting it needs to coordinate the traffic and perhaps toll it at some point. Is the industry thinking that there will be a toll in the future, that the way things were in the Strait of Hormuz will never go back to that? Or what is the commodity industry thinking about here?
Yeah, when we talk to clients, yes, this is debated as a pretty real possibility. And frankly, when we think about, at least based on the reported tolls initially, when we think about, let's say, a $1 per barrel added to the price of crude associated with a toll, most clients we talk to will talk about that as a small price to pay to avoid war. But it's still very unclear where this is going. I think you're right, though, and also the way that this escalation restarted seems to be very much tied to the control of this trade.
Moving on from crude to gas, the outlook there for Asia and Europe, how do you think competition between these two regions for the available stocks of gas, how is that going to play out in the summer and then into the winter then, Samantha?
No, exactly. And you just brought up the key point, summer and winter, in the sense that when the war started, we were going into shoulder months, March and April. So Asia seemed very willing to let go of LNG back then, liquefied natural gas, and more LNG was available to come to Europe. Once summer started, that completely changed. And the demand coming from Asia increased significantly. And today, it's still very well supported. So Europe has been losing out because of that summer-driven demand. And to your point, now we have winter in the horizon. So Europe and China and Japan and Korea all need to build their storage of natural gas ahead of the winter. So I think we're going to have to face some competition for cargoes.
Yes. How precarious does the European winter look if things stay as they are?
Very. We don't think that European storage is going to reach over 70% full anymore at this pace. The risk is that it goes lower and lower. And then the issue is, if you have a normal winter temperature-wise, we can probably get by. The issue is we cannot guarantee that'll be the case. So prices tend to rise to reflect that risk and try to discourage demand elsewhere. And that's what makes things really expensive.
And Samantha, lots of European governments then have been looking to insulate themselves from all of these developments in the Middle East. And the UK is no different in that regard. They're all looking at what they can do. There's been lots of reporting, including from colleagues at Bloomberg, about perhaps more drilling in the North Sea. I mean, what's the opportunity in the North Sea like? Is this a material supply still, or is this something that will just be symbolic and important, but not necessarily material to Europe's energy requirements?
This is a great point. Let's remember that this is the second very large energy shock within 5 years. So this focus on security of energy supply, I don't think, to your point, is unique to the UK. We see that across Asia as well. And it doesn't show only in the form of oil. I think a lot of countries will look around and see what they have, what they can invest in, and this is what they're going to do. So in the case of the UK, to look at oil and gas, and I think, to your point, it's not overnight, but this is a way of reducing vulnerability to imports. If you look across Europe, almost 50% of European energy consumption is still vulnerable to imports, is still dependent on imports.
Yeah.
So I think whether it is oil in the UK or, for example, additional coal production in India and additional solar panels everywhere.
Yes.
Right? So it's not just about dirty versus clean. It's about energy independence.
And could it be material, the North Sea, for the UK?
Over time, if you have enough investment. But this is not something that we would see tomorrow.
OK. Samantha, thank you so much for joining us. Samantha Dart, co-head of Global Commodities Research at Goldman Sachs. Now, another sector that is influenced by the oil price, of course, aviation. Airlines are warning about the impact of the latest energy price shock.
The conflict in the Middle East was the key mover of the numbers year on year, where we saw some consumer hesitancy. That led to closer in bookings and lower fares.
Okay. That was Neil Sorahan, the CFO of RyanAir, speaking to me a little earlier on this morning. We'll have more from that interview later in the programme. This is Bloomberg. Welcome back. This is the opening trade. It is Monday, and we are setting ourselves up for a session that looks as if it will start on the back foot. So European futures are negative. How much of that is last week's story? Are we going to get back to worrying about AI themes, the amount of capex within the AI space, Chinese competition? Is that going to dominate? US futures actually look pretty flat right now. Nasdaq futures up by 0.1%. But let's talk about the technology space, because Bloomberg has learned that Moonshot AI is planning an IPO within 6 months. The firm is seizing the opportunity to tap capital markets after its latest model upended industry perceptions of China's AI capabilities and sent tech stocks reeling. And this is a Chinese company. So Moonshot's recently released Kimi K3 model is set to outperform all rivals except for two. Those are Anthropic's Claude Fable 5 and OpenAI's GPT 5.6. And it outperforms them on overall capability. Here with more details, Bloomberg's Anthony Stevens in Hong Kong. Anthony, so plenty of macro market voices having to watch in great detail what is happening with the competitive developments on Chinese AI. What does the success of Moonshot's new model then? What does it mean for the global AI race?
And these developments are getting very granular. So on a headline level, this is a huge model and this is a huge leap into the frontier for Moonshot. It's a 2.8 trillion parameter model. It has 1 million token context window. That makes it a very large model. But what is unique about this model is how efficient it is in using resources, most notably compute and memory. These are two things in which China is obviously constrained due to the chip curbs. So this piece of software really creatively deals with that problem. It is natively trained in a low compute environment, and when it's learning and when it's being used, it uses less memory than you would expect of a model of this size. So that's quite innovative, and some of those kind of modifications are going to be released into the market on July 27th when it releases the weights. It is an open weight model, like most of China's AI LLM models. So what happens here is that there is a cause and effect chain where people start to worry about the ongoing capex in compute and in memory. And you're seeing that happen in Korea and Taiwan today, very sharp moves. Even China's market itself for compute and kind of the picks and shovels of the AI trade has retraced around 5% intraday today. So it's a very kind of volatile space. Korean volatility remains very high. It had two swings of over 4% today. Taiwan, under the hood of what looks like a flattish market, has multiple limit down moves. So the AI picks and shovels trade is getting really challenged by how efficient these new Chinese models are.
That's interesting because the Korean story you can kind of attribute to last week and say it was closed on Friday. It's just catch up. But Taiwan is interesting in that regard then. But the Chinese competition on AI doesn't stop there with Moonshot then, Anthony. We've also heard that Alibaba has also unveiled a new AI model. What does that teach us?
They haven't really released that many technical details, but the two bullet points that they have is that it's 2.4 trillion parameters and its performance is only second to that of Fable 5. So that's an interesting shot across the bow of Moonshot AI. And what is very interesting is that Alibaba owns a significant stake in Moonshot. So this is a bit of a family feud. It is a very capable model from the looks of things, and most importantly, it's being released in preview mode on Alibaba's existing subscription pricing. So this moves away from paying for tasks as the Americans do and moves to a subscription pricing. So this puts further pressure on AI pricing.
Anthony, thank you very much. Bloomberg's Anthony Stevens with some of the real granular detail that we're increasingly having to keep across when it comes to these global markets and the AI trade. Anthony, thank you very much. Let's turn our attention then to the markets in 3 minutes here in Europe on the opening trade with Skylar Montgomery-Coney from our Markets Live team. Skylar, good morning to you. Monday, and we're once again dealing with a higher oil price. So 90.70 is where we trade on Brent, up by just shy of 3%. We're already seeing that ripple through bond markets, slightly higher yields. How's that going to go down when it comes to the equity market session, do you think?
Yeah, I mean, I think we're clearly heading in the wrong direction in terms of negotiations, and that's kind of been the bias in the past few weeks where you saw the oil price bottomed actually at the beginning of July. Now, I think what's changed is we've had material escalation in recent days with two very key points for markets in that the Strait of Hormuz is essentially closed again. There's no traffic really going through. And then the second point is oil infrastructure is being targeted again. And so the bias is clearly higher oil prices from here. I think maybe we don't get to the kind of $120 a barrel on Brent that we had previously because we know there are mitigating factors, demand's being destroyed in terms of China's demanding less, but you also have supply going around Saudi Arabia. You have supply coming out of the U.S. from exports. But it's clearly a very worrying backdrop for equities when you also have these kind of wobbles within the tech trade, and that's a negative for growth when you have higher prices.
Yes, and where do the wobbles in the tech trade leave us then? Because actually, Anthony was right to point to all the volatility we've seen in Korea and some of the other markets overnight, but actually the Asia session looks overall quite calm compared to what we'd become used to in other weeks. So we're down by 0.3% on MSCI Asia Pacific. US futures look pretty flat. Nasdaq futures up 0.1%. So where does that leave us in terms of sentiment around the tech trade?
I think it's unsteady is the headline. What we've seen is that we know AI will be transformative and that there will be companies that will be hugely profitable on the back of that, but we don't know who the winners and losers will be. And no company has a monopoly, right? So you have huge amounts of spending, and the question is what companies will actually benefit from that on a return on investment perspective. And Moonshot feeds directly into those worries that maybe U.S. companies won't be the ones to benefit. I think we've had some of the froth come out in that if you look at positioning in, say, leveraged ETFs, that's not at the peak, but we've been building for so long. It's been months and months that you've seen debt margin rising in the U.S. And in June, that number was 50% higher debt margin year on year than previously. And so while, we're not having a turn from a more fundamental perspective in terms of we haven't seen negative earnings, that would mean you're more worried about a pop of the bubble. Certainly when you do get downside because there's so much leverage, the worry is that's quite big.
We're going to hear a lot about US big tech this week, aren't we? That's part of the earnings story. Then here in Europe, maybe proving the rotation trade is part of our narrative around earnings. So what are you watching for this week when it comes to the earnings drama, Skylar?
Yes, I mean, the earnings is a really tough backdrop for these companies to compete on in terms of we had TSMC last week. It was very strong and the stock was still down on the day. And I think it's a very high bar for that profitability to come in quite high for actually a rally. So I think you're just trying to get through without selling off significantly and making sure that you're not having that kind of peak, and seeing what CapEx plans really look like is the important bit there.
Okay, Skylar, thank you very much. Skylar Montgomery-Koning with the latest on markets. And remember, you can find the Markets Live team. MLIV Go is the function to find Skylar and the rest of the team on the Bloomberg terminal. And a reminder, we have comprehensive coverage. We saw Guy earlier on in the programme from the Farnborough Airshow throughout the day, so we won't lose sight of the aviation themes in focus. Clearly, developments in the Middle East, very important there. Guy Johnson will be speaking to the biggest players in the business, including Boeing CEO Kelly Ortberg. That's at 9:15 a.m. We're also, of course, focused on UK politics. Andy Burnham set to become the UK Prime Minister. He's made it back to Westminster as an MP. He's already leader of the Labour Party. Keir Starmer will go and tender his resignation to the King later on today, and Andy Burnham will arrive back in Downing Street to take over as the 7th Prime Minister in less than 10 years in the UK. What can we expect? More on that next hour. This is Bloomberg. Welcome back, everybody. A few minutes to go then until the opening trade here in Europe. For this Monday morning, let's have a look at where we were on Friday. Seems like a long time ago, but this is the picture over in the United States on Friday. The S&P then continued to lose a little bit of steam after European equity markets closed. And as a result of that, we were set up perhaps for a little bit of negativity. And we are expecting to see a little bit of negativity. I point out that US futures, though, are pretty flat. NASDAQ futures just to the upside. E-mini is just to the downside, but pretty flat overall, as if we're trying to pause for breath, really, around the AI story and the energy inputs, because we do have a considerably higher oil price this morning, up by 3%, 90.82. What kind of impact will that have on European stocks? Let's have a look at the European futures picture with that in mind. And maybe this is something, it's already impacted the European bond markets, concern around inflation pushing yields up a little this morning. And what does that mean for European stocks? Well, the futures picture does look a little negative, down by around 0.3% on all of these markets. Last week, the focus was, yes, on higher energy prices, and that actually pushed energy stocks up quite considerably, so up by around 3.7% in last week's session. Let's have a look at some of the individual stocks we're watching. Everything to do with the UK will be in focus as Andy Burnham is going to become the Prime Minister, and is he going to give any further clues? Not a great deal of granular detail on any policy just yet. RyanAir certainly in focus on the back of their profit miss against expectations, the oil price taking its toll in the first quarter, so we'll certainly keep an eye on that one. In the aviation sector, where we're seeing quite a bit of M&A activity, of course, now. AI and data centers also in focus. There's an Italian business called Prysmian, which is a cable maker. They've signed today €5.5 billion optical cables packed with Molex. That is often talked about as one of the ways that you can play AI trades here in Europe. So let's think about that. So European equity markets then opening up this morning. And as we've mentioned, the futures picture looking kind of negative. So we are expecting a little bit of downside movement here. But with the higher oil price, perhaps the London market won't be the place that we see it. Perhaps that will be an area of resilience. And so oil prices are up over $90 a barrel. And so we'll look for that to be the case. In terms of the European energy stocks, then, we are seeing some movement higher this morning, up by around 0.8%, it would seem. Technology stocks also moving higher by around 0.4%. So not a great deal of other movement to the upside, but that's where we have some movement higher. And you can see that actually the FTSE 100 is one of the worst performers this morning. So it's not as if this is all a resilience story about the FTSE 100. So the CAC 40 is down by 0.2%, the DAX down by 0.3%, broad negativity, but not by much across these European equity markets. Looking at sectors then, and it does tell an interesting story about energy. That sector is pretty resilient, up by 1.2% this morning. Technology, as I say, up by 0.4%, but that's it. Those are the only areas of green I can see on my screen. To the downside, travel and leisure is by far the worst performing sector, and that's where we find RyanAir. That particular stock is down by 6.7%. Deutsche Lufthansa down, perhaps in sympathy, down by 2.5%, and IAG also negative. So that's having a broader impact on the travel and leisure space. The numbers out of RyanAir this morning you can see in that regard. Let's quickly check on what's going on with gilt markets. We've talked a little bit about the rise in bond yields that we've seen in Europe this morning on the back of the higher oil price, and that has, no surprise, spread to the gilt market. And actually we're seeing a bit of a more significant move, but really not that much. 4 basis points higher at the 10-year horizon. 2 years, yes, 4 basis points higher there. So we're seeing similar moves, perhaps of a slightly greater magnitude in gilt markets versus the rest of Europe. Let's put all of that together this Monday morning and talk to Paul Jackson, Global Market Strategist for EMEA over at Invesco. Paul, very nice to speak to you this morning. Thanks for coming in. We've got a couple of competing dynamics. It seems that we're not quite sure what to do with the AI story this morning. Energy stocks are higher on the oil price going higher this morning. But on technology, we're not quite sure what to do with that theme. Technology quite resilient, it would seem, in the European session. But we have an ongoing conversation about Chinese competitive threats. What's front and centre for you when it comes to the European equity market space right now?
Morning, Anna. I think the important thing is probably what's going on in the Middle East and what happens to the oil price. We'd had oil coming down really nicely, which I think took the pressure away from central banks to tighten. Now we've had the rebound. And I think depending how far the rebound goes, it's already impacting bond markets a bit, but I think that could have a bigger effect on stock markets via anticipation of what central banks may do over the coming weeks and months. So that's where I'm really focusing, because it potentially could still change the growth outlook.
Yes, and so some cyclicals have started being talked about as being quite attractive, given we'd seen oil prices come down quite a bit, and then there was an urge to rotate into other themes other than AI, and so cyclicals were being seen as quite positive. Does this resurgence of the oil price on the back of escalation in the Middle East, does that lead us to question the rationale behind going into cyclicals at this point?
Yes, for sure. I think if we go back to March, the first couple of months of the year, it was all working out very nicely. We were looking ahead to the global economy, accelerating, cyclicals were doing well. The AI theme had gone to the background. Then we had the war starting with Iran, and all of a sudden we put into question the global economy, which means that you're looking for those growth themes. And AI is that classic growth theme, non-cyclical. That again has faded. Prices probably went too high. It's faded. You've had some correction there. But all of a sudden, I think if you're questioning economic growth, then these growth themes will come back into focus. So that may help out the AI and technology sectors in general.
Yes, we have been questioning where we are on the tech trade, haven't we? And we've seen big profits accumulate to Nvidia, and then the hyperscalers, and then memory companies. And now, are we sure? Do we have any visibility about where those profits are going to accumulate next? Where in the tech stack? Where in the complicated supply chains of these businesses?
Yeah, but it strikes me that we're seeing sort of successive tsunamis. As you say, we had the hyperscalers, then we worried about the amount of investment they were doing. So, okay, let's buy the people who are selling the goods to the hyperscalers. So that was your semiconductors and computer manufacturers, particularly in Asia. Perhaps the next wave is going to be the people who sell the components to those suppliers, to the hyperscalers. So you're just moving further down or up the supply chain, whichever way you want to look at it. And so perhaps those component manufacturers in places like China could be the next story.
And do you think higher interest rates are, well, the expectation around higher interest rates, one assumes, is given a boost by this higher oil price? Is that a European story? Does that extend to the US? Or are higher rates in the US about something else, about AI and the resilience of the US economy?
No, I think the higher potential inflation story is a global story, so it will impact the US just in the way that it will affect Europe and Asia. So far, I've got to say, the reaction of bond markets and stock markets to the rise in the oil price, I think, has been pretty calm, and I worry that if the oil price stays where it is or goes higher, then we may see a delayed reaction coming through. But no, I think the inflation story is global. Whether we get to energy shortages, that's then a different story. The US is then different to Asia and Europe.
Yeah, and what are you expecting, Paul, when it comes to the US around interest rate hikes? We have heard from Kevin Walsh. He's pushed back on the idea that he just wants to focus on the trimmed PCE, but he has cited it in the past as being a useful gauge, although he said he doesn't think any of the inflation gauges are very useful right now, hasn't he? So maybe we're waiting for all of these task forces to report. But you point out that the trim mean PCE has been trending up a little bit, and so where does that leave us in the sort of narrative around Fed hikes?
Well, I think the bigger problem for the Fed has been the core PCE measure, which has been trending up since October. And actually, the trimmed mean has not followed that upwards. But my observation is that historically, when they reconverge, which they tend to do, that reconvergence tends to be the trimmed mean moving towards the core PCE. So whichever measure you use, I think the Fed probably does have a bit of an inflation problem. Inflation, core inflation, whether you look at CPI or PCE, has not come down to target and seems to be moving in the wrong direction. That could argue for rate hikes, but to tell you the truth, I think the Fed still, in its heart of hearts, has an easing bias. So I think it's going to take them something to switch to tightening. So personally, I think they're going to be sitting on their hands for perhaps the rest of this year.
And Kevin Walsh has pushed back at the idea that there's political influence on his decision-making, saying he's very independent. But being stateside in our conversation makes me think about the midterms. And we haven't perhaps talked as much as we might have done in any other year about the impact the midterms are going to have, because we've been too busy talking about the war in the Middle East and the AI boom. What are you expecting from the midterms in terms of the effect on markets and where we go?
Well, that's a tough one. Historically, if you look at the performance of US assets during the year of the midterm election, it tends to be pretty poor. Assets don't do terribly well. But then in the year following those midterms, you get better performance, better than in an average year, and you get better performance, particularly in the riskier assets. So S&P 500, S&P 600. The interesting thing is that this year, stocks have already done very well, and the small caps, the S&P 600, for example, has had a really good year. So I'm wondering to what extent there is already a pricing in of these increased guardrails around the White House that will come after the midterms. Markets, for once, perhaps welcoming the idea of some sort of gridlock. No decisions are better than decisions and actions, the sorts of actions that we've seen in the last 2 years.
Yeah, and where does that leave all of the broadening narrative then, Paul? Does that mean the broadening narrative is intact because people are looking outside the United States for various reasons and looking at European stocks, or the higher oil price and nervousness around cyclicals means that, no, this isn't Europe's time?
I think the broadening is intact and has been intact this year. When you're looking at AI-related stocks, the action really hasn't been in the US. It's been out of the US. It's been in Asia. Within the US market, small caps have been outperforming mega caps. So you've been getting broadening to that extent. And if you look at performance this year, banks have been doing reasonably well, especially in the last month or so. Telecom stocks continue to do very well, which is a sector that just kind of sneaks through without being noticed. So I think there is a reasonable amount of broadening already happening. And as I was suggesting, even within the AI theme, you are getting rotation. Mega cap hyperscalers to the Asian suppliers, and like I say, possibly going to the component manufacturers.
We saw Citi upgrading their call on Chinese stocks to overweight, and I'm thinking about the conversation I had earlier on in this programme about Chinese competition on the AI front. You've talked about the boom in Asia tech. Of course, that's been in support of the US tech boom, even if they've been fighting over the profits maybe in different parts of the supply chain, but they're all in the same supply chain, whereas the China story is a little bit different. How are you expecting, how does that complicate the AI narrative, do you think?
First of all, I like the Chinese market. I think it's still one of the few markets out there, of the big markets, that is good value, that is cheap. The cyclically adjusted PE is still well below historical norms and a long way below what you see in the US and even Europe. Secondly, there's lots of interesting technology stuff going on in China. Just the way that they use technology on a day-to-day basis is really impressive when you visit. But they've got all sorts, robotics. China really leads the way in robotics. It obviously led the way. It's dominating the global solar panel industry. It is now dominating the global EV industry. I think bit by bit, China is moving up that value-added chain.
Yes.
And so I think that tech in China is still going to be an interesting story. So, yes, I have been overweight Chinese stocks for some years and remain overweight.
OK, Paul, thank you very much for joining us. Paul Jackson, Invesco EMEA Global Market Strategist, and thinking about ways to play China stocks, takes us to Hong Kong, where a nice red headline across the Bloomberg terminal tells me that the Hong Kong Exchange is considering longer stock trading hours, including, drumroll, scrapping the lunch break. This is very much an effort to take it into line with other global exchanges. The exchange is also considering an after-hours session to catch the early US activity, potentially between 8 p.m. to midnight over in Hong Kong, which will be limited to a handful of larger stocks. So that's an interesting one to watch. The exchange said it is reviewing opportunities to bolster market accessibility, including these trading hours. They are also looking for feedback. So if you have any feedback on the absence of a lunch break, be sure to make it known. Let's get back to the here and now on the markets as we are seeing them open up 12 minutes into session here in Europe. And let's have a look at the core six. We've got a bit of a mixed bag actually coming through here. The AI theme, as represented by Schneider Electric, is flat. ASML is up by 0.6%. In the more defensive sectors, Novo Nordisk up 0.2%. Nestle is down by 0.9%. Luxury, modest moves. Rheinmetall in the defence space, pretty flat this morning. A few other aviation stocks to focus in on, or some aviation stocks, I should say, to focus in on. RyanAir, Lufthansa, IAG, all being shaken really by what we've heard from RyanAir. The company reporting numbers today that came in for the first quarter below expectations, and oil prices certainly very much a theme there. I spoke to the RyanAir CFO, Neil Sorahan, a little bit earlier this morning. We discussed how the company is handling higher jet fuel costs and more.
There hasn't been any shortage of fuel. I think there was some concerns about that earlier on in the year. No difficulty at all on that front. As I said, very well hedged at $67 a barrel, 80% of our fuel hedged, but importantly, 90% of our dollar requirements hedged out to the end of this year at 115. The 20% unhedged, we don't know where it'll go. It had dipped after the MOU was signed. We were already hedging into FY28 since the conflict escalated over the past couple of weeks. The price has spiked again. I think it's over 90 on Brent,
yes,
which means it's well over $100 a barrel on jet fuel this morning. But we're better hedged than everybody else. I think a lot of capacity is going to come out of the market this winter, and I think inevitably you may see some airlines go to the wall.
Any sense that people are booking a little further ahead? You know, they changed their behaviour when the war started, booked very last minute. Any sense that that's changing at all?
I think they're hoping to get a bargain at the last minute, but the reality is if you book close in, you're going to pay up. So my advice to everybody this morning is to book now as quickly as possible, or you're going to end up paying significantly higher fares closer in.
Yeah, you said this morning you're not giving any guidance because you have no visibility. What is it in particular you can't see?
It would be unusual for us to give guidance this early in the year in any event, but where we've even a little bit less visibility and a lot of uncertainty around the 20% unhedged fuel. I mean, we would typically give profit after tax guidance in our Q3s. It's our Q1 numbers.
Yeah.
So it's far too early to give that.
A few other things I just wanted to ask you about then, Neil. One of them is, obviously, we've seen a bidding war taking place for one of your rivals, for EasyJet. What do you think is going to be the end result here? Is EasyJet going to remain what it is right now, do you think? What are you planning for in terms of the competitive environment?
I think, we've been talking about consolidation in this industry for many years. We think ultimately we'll end up with 4 large players, with RyanAir being the key point-to-point and 3 flag carriers remaining as the key players. It's inevitable. I think that happens within the sector. Whether it's Apollo or Castlelake or somebody else buys EasyJet, capacity, to my mind, will come out. I think some of the assets will be used for other purposes.
Benefit, you think?
I think ultimately, consumers are going to see pricing going up. We're going to see capacity coming out of the market, and I don't think this will be the last of the consolidation. I think this will actually probably push further consolidation within the sector. There's already a number of weaker carriers who are struggling with fuel at the levels they're at. They're not very well hedged. They don't have the dollar cover in place. I think you'll see some casualties on that front as well.
Lizzie Burnham's in Downing Street. Any message for a new Prime Minister, Neil, in the UK?
I think he has a phenomenal opportunity to grow tourism and to grow jobs in the UK by getting rid of APD in the first week in office.
That was the RyanAir CFO, Neil Sorahan, ending there with a message on UK politics. Coming up then, markets keep a close watch on Andy Burnham as he prepares to take over as the UK's next Prime Minister. We will discuss the outlook next. This is Bloomberg. Welcome back this Monday morning. This is the opening trade, and 20 minutes into our European session, we're seemingly on the back foot, and the FTSE 100 actually faring worse than some of the other markets, so not getting too much resilience from the higher energy prices, which is lifting the energy sector. So the energy sector is up by 1.3%. Technology also firmer, up by 0.4%. But elsewhere, we have travel and leisure, basic resources, consumer discretionary, moving a little bit lower this morning. Now, let's talk about UK politics. Andy Burnham is set to become the UK's next Prime Minister today, the 7th in just over a decade. As the country awaits his arrival at 10 Downing Street, traders and investors are weighing how a Burnham premiership may impact markets. Let's think about that with Bloomberg Markets Today editor Moena Coniam. Good morning, Moena. So, I mean, we keep hearing him speak, and I'm not sure we have a huge amount of detail, more detail to go on as to what policy will look like, what his top team will look like. What any new movement in the markets today? I saw that bond yields, gilt yields, looked a little higher than the rest of Europe in terms of the scale of the move this morning, but not by a huge degree.
No, and that is actually pretty consistent with what we've seen when oil prices have risen due to geopolitical circumstances. The gilt market is particularly sensitive because the UK is particularly sensitive to energy shocks. So I don't think that that's necessarily telling us a huge amount about how markets are viewing what we're expecting today. I think largely because we don't know a huge amount. I mean, there's probably is a little bit of uncertainty baked in there, but it's not necessarily pronounced where we would expect it to be. Overall, I think who is going to be Chancellor will be crucial, and that is something we don't know. I think polls are now leading towards Shabana Mahmood. which has been seen as a slightly more market-friendly choice than Ed Miliband, who, when we did our markets pulse last week, came up as the least market-friendly. So there was a little bit of relief when that started to seem it might be the case last week, but that's really not based on a huge amount of confirmed information. Burnham said on Friday he hadn't chosen yet, so I think that's something we will be very, very closely watching to see what happens.
And no doubt we'll be watching when he comes to Downing Street later on today. He will be speaking to the nation, no doubt, and talking about his hopes for the future. But there again, it would be unusual for there to be a lot of policy detail. So the first clues we might get will be these key appointments. But then I don't know whether Shabana Mahmood should I expect any movement in markets on the back of that, because yes, she's pretty well known as Home Secretary, but very unknown in terms of Chancellor credentials and opinions and views and voting history when it comes to economic matters.
Absolutely, it's not somebody we associate with a particular sort of economic agenda. There hasn't been a lot of coverage of that, and so I think what is said and what policies are announced will be crucial. I think it's important to note that Andy Burnham has said he'll stick to the manifesto pledges, which means a certain number of taxes can't be raised. And so far, he said he's going to stick to the fiscal rules as well. So that should give us some reassurance. He has, however, where he has given some direction of policy, it's been obviously very centred around devolution, home building, nationalisation of Thames Water, and doing more North Sea oil drilling. Aside from the latter, I think there's not very much clarity about where the money for extra sort of cost of living supports, which has been indicated he might want to do, is going to come from. So there will need to be some policy announcements on the economic front to explain that, and I think that's what we'll be really closely watching.
Yes, I wonder if we're watching that personal allowance and taxes relating to that. Something with his interview with The Times makes me think that could be an area of focus. Mwena, thank you very much. Thanks for joining us. Bloomberg's Mwena Koniem. One of Andy Burnham's immediate challenges will be responding to increased tensions in the Middle East as far as it affects the UK. Brent Crude jumped after the US and Iran escalated hostilities, including the targeting of vessels attempting to transit the Strait of Hormuz and an attack on a key oil facility in Kuwait over the weekend. Let's get more now with Stephen Stapczynski, who leads our energy coverage in Asia. Stephen, how are the latest escalations then affecting flows through the Strait, either with or without transponders?
I mean, I think essentially you could say that flows have really dropped pretty significantly and have been relatively, pretty low, if not the lowest in over a month. Because of this conflict and the risks around the Strait. So in terms of ships with their transponders on, that's essentially halted. We're seeing very little traffic, a trickle if that, going through the Strait of Hormuz. Now, dark traffic is harder to kind of watch. There are ships that are going through without transponding their location. And we are aware that that's happening, but still through our reporting, either anecdotally through ship owners or exporters themselves, everyone is taking a much more cautious approach to sending any oil products, LNG, what have you, through the Strait of Hormuz because Iran is a live threat. Iran has sent back several ships, they said, that were going through the Omani route through Hormuz just in the last 24 hours, and there are reports that one ship was also damaged through an attack. So this is something that the ship owners and the exporters are taking very seriously, and it's something that they're going to have to be cautious about going forward because it's just not a matter of potentially hurting the ship itself, but a lot of times the crew will not agree to go through, and that is an aspect that has to be considered as well.
Stephen, thank you very much. Bloomberg's Stephen Stapczynski with a quick rundown of the latest developments in the Middle East and the extent to which that's having an impact on oil prices. So oil prices are up by 2.2%, $90 a barrel on Brent. Andy Burnham, just like many other European politicians, perhaps won't like that kind of headline. We're in the summer where it's hard to think about a time when you need to heat your home, but that will become quickly an issue. We'll be watching, of course, stockpiles around Europe as well when it comes to gas. So coming up, we'll get back to the UK conversation. Could the UK's incoming Prime Minister have an economic policy surprise up his sleeve? We will discuss the outlook for policy with BlondeMoney's Helen Thomas. That is next, coming up shortly here on Bloomberg. Welcome back. This is the opening trade. We're 30 minutes into Monday's session, and the European equity market picture influenced by a couple of different themes. One is competition from Chinese AI firms that has been taking the edge off perhaps the AI narrative of late. But the handover actually from Asia was a little more subdued than it has been. And US futures have really picked up in the last 10 minutes or so. So NASDAQ futures are up by 0.5%, E-minis up by 0.2%. So although we started off the European session in negative territory, we do seem to have recouped some of those losses. We're also dealing with a higher oil price, but even there we're getting a little bit of reprieve because the oil price was above $90 a barrel, now $89.80, so not a huge change, but it's not quite as high as it was, and maybe that is helping at the margin. So we have a pretty mixed picture, pretty flat picture for European stocks, and the FTSE 100 just underperforms a little, down by 0.5% this morning. Thinking about the UK, Britain's middle class is showing signs of buckling under financial pressure, with a share of average earners missing direct debit payments doubling since 2021. As part of a 10-year plan, incoming Prime Minister Burnham is considering a wave of interventions to ease the cost of living. Joining us now to think about where that takes us, Helen Thomas, CEO of BlondeMoney. Helen, nice to speak to you. And that 10-year line is one thing that comes through in this interview that he's done with the Times newspaper here in London, which is interesting in itself, isn't it? Thinking of somebody who doesn't have a mandate from the British people, but he's talking in terms of a 10-year mission. Keir Starmer talked about a 10-year plan for the UK. What do we think should be in focus for him if he has that 10-year plan?
Well, very bold, as you say, for someone who hasn't even won an election, when the last person to talk of a 10-year plan 2 years in is no longer in post. Look, he's facing all the same challenges as Keir Starmer. We know he's going to sell himself as a better salesperson. But what can he actually do at the margin? I was struck by some of the comments that he's made. I was trying to reflect, the man on the street. He's talking about going for a pint at the end of the week, taking the kids on holiday. Great. I'm sure that will appeal to a lot of voters. Fascinating your point there of the statistics of people on their direct debit payments, because there is real hardship out there. But it's the continued issue of, if you're going to ease up, you're going to have to then take back somewhere else. And I'm also struck that Burnham's main comment is we may have to ask for a little bit more. Loves that phrase. Exactly what does that mean, a little bit more?
Yeah, what does a little bit more and whose shoulders does that fall?
Exactly.
So we mentioned that direct debit statistic, as that's a sort of around the middle earners. Thinking about the lower earners, I was struck by this comment in his interview with The Times where he says, one thing I heard most on the doorsteps in Makerfield was frustration about the personal allowance frozen at £12,570. And this, for the international audience, is an amount of money that you can earn without paying tax, income tax. And although there are commitments in the manifesto not to increase taxes of various kinds, I mean, many governments have tried to take action at this lower end on occasion. I mean, is there fiscal headroom for him to think about unfreezing that and allowing it to drift upwards to stop the fiscal drag?
Well, it's very expensive. And in fact, it's something that Conservative governments looked at in the past. George Osborne wanted to take more people out of tax. The coalition government did.
And they did do that, didn't they? But then we had COVID and things changed.
Things changed. One of the interesting things George Osborne did was say that above a certain level, you lost a personal allowance. And that's still in place, actually. It creates a very weird incentive in our tax structure. Some people watching may well know above £100,000, you lose all of that personal allowance, meaning you are taxed immediately from the moment that you earn. So it's very expensive because it applies to almost all taxpayers, potentially, to shift that. But if they perhaps do that kind of tinkering towards the top, along this thesis of who are they going to ask for a bit more? Well, those with the broadest shoulders. Could it actually kick in at £90,000? There are ways to make these sums add up. But do you know what struck me when he said that? We talked about his sales line at Man of the People vibe. Do you really think many people on the street know that £12,570? It strikes me. I'm not entirely sure that they said that, but they probably did say something like, goodness me, I'm only on this much money. Blimey, I'm paying so much in tax.
Yes, maybe that's his translation, of what he's been told.
But probably signals what he's been talking to the Treasury about.
Right, which would be interesting. What do you make of the devolution plans, and what difference can they make?
Well, I was actually, very interesting at the moment. The House of Lords Economic Affairs Committee is doing an inquiry into fiscal devolution, and I was at one of the hearings for that recently. And quite universal scepticism from lawmakers that it sounds good, but where does the buck stop? So it's all very well to say that a local region might understand better how to raise the funds and spend them. But what if it goes wrong? What if it overspends? That did happen during COVID. There were regions that effectively went bust, councils that went bust, and it ends up on the UK balance sheet.
Yes.
So I think it's an interesting idea in terms of empowerment at a local level, but fiscally, I think it contains risks.
And does it suggest that we're going to see revenue-raising powers across the country expanded? I mean, we have that to some degree in devolutionary powers in Scotland and
Rachel Reeves actually has started some of this earlier on in the year, and it's to do with, for example, sort of earmarking money that's already been raised for a certain area. I think they will do a little bit more, but I think it will be quite hard in practice to pull that lever too quickly to have a massive impact.
Yeah, one of the criticisms that some levelled at Starmer was in the face of all of these U-turns, they said, he just doesn't want to disappoint people. He's not very good at disappointing people. Do you think we will get a sense of who Andy Burnham is prepared to disappoint at any time soon?
Well, he will have to, because to govern is to choose. If you don't, you're out of government, as Keir Starmer found out to his cost. And I think the key issue for Andy Burnham now, he's done a good job of convincing his Labour MPs to get to this point. Now he has to convince Labour voters and the rest of the country that he can do something for them. But let's just do the context here. Labour went from 34% in the polls at the general election, collapsed, lost almost half of that support. Now they're climbing back a bit. They're around about 23 percentage points in the polls. Can his agenda, which he calls business-friendly socialism, Manchesterism, really appeal beyond this segment of the electorate that are, let's face it, socialist-leaning in their inclinations? And that is his real challenge in a very fragmented electorate and a multi-party system.
Yes, and he talks about the policies being distinctly Labour. And I wonder, I talked about this with Simon French at Panmure Liberum earlier about the international context here, because actually we are in a world where internationally we see a lot of government intervention in markets and in industry and in all kinds of areas that maybe 10 years ago would have raised alarm bells, which are now quite normal. And I wonder what that international context does to this government's ability to intervene in markets. They've got bold ambitions, for example, reindustrialisation.
Yeah, and talk that the actual business ministry could be expanded to be a ministry of industry. Although, so far Andy Burnham's speech that we heard on Friday, it was rather a throwback, talking about, the end of the last 40 years, and he thanked a lot of politicians from the past. But as you said, we're in a new world now. Look, the Overton window of what is possible shifted dramatically under COVID in terms of state intervention and in terms of the public saying, well, if you could pay us to stay at home, if you could then sort out a vaccine, why can't you solve inflation? And I think that every government is struggling with that in the West. But the bill comes due in the end. And it appears to be quite difficult so far for politicians, perhaps from an older era, to explain these new challenges that are being faced.
OK, Helen, thank you very much. Thanks for joining us. Helen Thomas, the CEO of BlondeMoney. Now, the future of Andy Burnham's policy remains in focus, including what he could do to support industry. Let's get back to Farnborough Airshow, where the world's leading aviation companies are gathering today, of course. And let's get to Guy, who's on the ground there. Guy, good morning once again. So what are you hearing about the future of the aviation industry in the UK? Is this going to be a story that Andy Burnham is going to want to tell?
Well, he's going to want to talk about the idea of how he is going to boost defence spending and do it at the same time as managing his other priorities as well. It's going to be a similar story across much of Europe, ex-Germany, I suspect. Europe wants to rearm, Anna. It needs to rearm. How it pays for it remains an open question, and what it buys remains an open question as well, because the key issue is the UK may be a little bit of a different case here, but most of Europe wants to rearm, but it wants to do it with as much domestic kit as it possibly can. And that brings into tension the North Atlantic story. How does Europe rearm? Does it have capability gaps that it can fill itself? Or does it need to turn to the Americans and talk to companies like Boeing, where I'm sat now, or Lockheed Martin just down the road, or all of these other big companies that have the scale to deliver maybe what Europe needs? So Andy Burnham's going to face some really interesting challenges. He clearly needs to spend more on defence, but he's got a lot of spending priorities right now. How he delivers upon that remains an open question, but there is clearly a need to spend more money. I think the question and the tension here at this show is going to be on what that money gets spent and with whom. Can Europe deliver this capability, or are they going to need to turn to the Americans? And that, I think, is the question that I think maybe gets resolved here a little bit. And some of the partnerships that you're going to hear about over the next few days will, I think, be hugely significant in solving that tension.
And what else are we looking for then at the air show, Guy? You say you're talking to Boeing. That makes me think of commercial aircraft as well. Usually there are lots of commercial aircrafts being ordered, aren't there? But you want to make sure that they're getting the right attention when those orders are done.
So it's interesting, actually. For the first time at this show, and RIAT, which is the kind of the big defence show that normally happens side by side, isn't happening this year. There's a lot of military kit here. The focus has definitely shifted. But there's some really interesting stories around what's happening on the civil side. But you take a step back, you listen to what RyanAir has been saying this morning, what Neil Sorohan, the CFO, was saying to us a little bit earlier on. There is an oil price, and you've been covering this morning, at $90 a barrel. You've got a consumer that's still in okay shape, a consumer that still wants to fly, particularly over in the United States. But the headwinds are gathering, and $90 a barrel is challenging for the airlines. It's a huge input cost for those businesses. How does that get reflected in future orders? We've seen very strong orders over the last few years. Does that get sustained, I think, is going to be one of the key questions. And what type of aircraft are they going to be ordering? Fuel-efficient aircraft are certainly going to be in demand, but is that going to be balanced against a more cautious consumer going forward with oil prices at where we are now?
Guy, thanks very much. Guy Johnson, of course, on the ground at Farnborough Airshow. And Guy will be speaking to the Boeing CEO, Kelly Ortberg, at 9:15 a.m. So stay with us here on Bloomberg TV for that really important conversation. Coming up then, we will be speaking to the CEO of a European startup focused on discovering new materials for use in semiconductors. What difference can AI make when it comes to discovering those new materials to remove some friction from the supply chain with regards to AI build-out? That interview coming up next. It's a European story around AI, so stay with us. This is Bloomberg. Welcome back. This is the opening trade. We are 45 minutes into a European session that has European equity markets overall pretty flat, but that is an improvement on where we were at the start of the trading day. So we did see a little bit of downside movement, perhaps to do with concern around technology in the Asia session, Chinese competition for AI models. Maybe that is part of the nervousness. Certainly there was nervousness around a higher oil price, and some of that is being unwound. And as a result, we're seeing a better optics on these European markets. US futures are pointing higher now. Interesting lines coming out of Iran just in the last few minutes, and these have allowed the oil price to pare some of its earlier gains. So the oil price was above $90 a barrel. Now we're at $88.70, so just paring a little bit of that gain this morning. Iran saying that it received proposals from mediators in the war with the United States, which is interesting when we're looking for clues that these two sides are either directly or, in this case, indirectly still in touch with each other. So that at least takes the edge off perhaps some of the tit-for-tat escalation we've seen over the weekend. And Iran saying earlier that the MOU is only worthwhile if all parties are committed to it, which strikes me as interesting, as they'd previously said that they were the deal was over, that they backed away from the MOU. So we're watching all of these lines and the nuance that's coming out of Iran this morning. So let's put that to one side and think about where we are on the AI story. As global demand for semiconductors continues to grow, British startup CuspAI is looking to use AI to improve the production process. The company has just raised $450 million from investors, including Jeff Bezos. The startup is also launching its AI Materials Foundry, as it's called. That's a coalition that includes tech giants such as NVIDIA and Meta, and it's all about discovering materials for chips more quickly, more cheaply. Let's bring in Chad Edwards, co-founder and CEO of CuspAI, with us on set this morning. Chad, nice to speak to you. Thank you for being with us. So let's start with the basics. You're raising some money. What are you planning to do with it?
Yeah, so the raise today allows us now to scale our team globally across the US and also APAC. So we've announced today the presence of both an office in both regions, so in the US and Singapore. So it allows us to expand the team and the reach of our company, but it also enables us to train larger domain-specific models for material science, and therefore will allow us to have a much greater global impact on some of the topics that we started to cover. So semiconductors, of course, is a very big focus for our company. But in addition, we work on things in the energy transition as well as in climate technologies.
Yes, and it seems to be semiconductors that's getting a lot of the headlines at the moment, given everybody's scrambling for sort of AI capabilities. So faster discovery of materials for chips. Tell us why that is so important in an industry where there are lots of pinch points in the supply chain.
Yeah, so not many people think about this or spend time thinking about it. The entire semiconductor industry is a material science problem. From the very beginning of the value chain with companies like ASML, who produced the lithography machines, from the silicon wafers, these are the things that actually constitute the basis of the chips, all the way through the process is a material science challenge. And so at each step, we are bottlenecked in that semiconductor value chain by material science. And the way we've discovered materials over the course of the last 100 years has been very much based on trial and error and serendipity. And so if we can come up with a new way of discovering materials, which is what we've done here at Cusp, we can accelerate every step of the value chain in semiconductors. That allows us then to have more efficient, more productive and more powerful chips.
And the geopolitics of the supply chain, perhaps not your primary area of focus, but thinking about it, does that mean that for Western businesses, they have to rely less on the materials coming out of China, rare earths, for example? Is that part of its appeal to Western chip companies?
Yes, it's not been a specific focus for us as a company, but one thing we've seen from the market and the way our customers are coming in is to say, hey, can you come up with an alternative to replace ruthenium or iridium, some very precious metals, where the supply chains reside outside of the Western world. So we start to see that in an inbound fashion, but it's not been a major focus so
And
far.
what about the competitive landscape here? Because you're doing this, other businesses have talked about doing it, and I know Google DeepMind with Deep Pockets, they've talked about getting involved in this kind of material science discovery. Is that a competitive threat, or are you just glad to see this sector open up with an AI focus?
Yeah, so when we launched the company 2 years ago, we were one of the very first out to market, and there were literally less than a handful of people or companies in the space. Fast forward 2 years, we almost see a new entrant almost every week in the space. So the space has just completely exploded, and that's from startups as well as the big frontier labs like the likes of DeepMind. And from an honest perspective, I think that's validation for the space. If we were the only company still, fast forwarding 2 years, that would be much more of a concern. So I see this as good validation. They see the opportunity. And of course, Jeff Bezos has his own startup in this space now called Project Prometheus, which is also in a very similar space. And so he also sees the opportunity as well.
You're a very young business to be raising such a lot of money and to have the value that you now have then, Chad. I know you've got some very experienced pioneers of modern AI within your sort of advisory body or advisory board. So Jan LeCun, Geoffrey Hinton, notable names with quite a bit of experience. How does it feel to be growing quite as fast as you are as such a young business?
Yeah, it's incredible. The energy behind the company right now is incredible. I mean, from the talent that we're able to attract and retain within the company, obviously the capital that we're attracting and the quality of the investors, the projects that we're seeing come through with customers, and ultimately the impact that we're going to have. It feels like the wind's really behind us in our sales right now. So, yeah, we've grown very quickly. We're nearly 100 people in 2 years. So there's obviously an ingestion period that happens as you bring more people into the company, but we're trying to do that in a very sustainable fashion.
Yeah, and you mentioned that semiconductors is only one part of what you're focused on, although, yes, for obvious reasons, gets a lot of attention. What about on the... but energy resilience is also an area we talk about a lot, given what's happening in the Middle East and lots of European countries trying to improve their resilience there. I mean, what are you doing in the climate field, in the energy space? Yeah,
so in energy specifically, we see a lot of demand from solar companies. So we now have multiple solar programs ongoing. And of course, if we can discover a new material that goes into the next generation of solar cell, even if we can just get a 1% improvement in efficiency of converting sunlight into power, that has a huge potential for the world. And so that's just one example. We have programs working on new hydrogen fuel cell technologies. And then more on the climate side, we're working on carbon capture, which of course is a bit of a frontier bet, but something I truly believe the world needs more of. And in addition, we're working on problems like PFAS removal. So these are forever chemical removals from water. So a broad spectrum across energy, environment and electronics.
OK, Chad, thanks so much. Thanks for coming to talk to us and bringing us the story behind CuspAI. Chad Edwards, co-founder and CEO of CuspAI. Let's look ahead to some of the potentially market-moving events that we are focused on this week. Today is Monday. Not sure I need to remind you of that, but Andy Burnham is set to become the UK Prime Minister. Plus, there's the Farnborough Farnborough International Airshow. That's getting underway. So these two focuses of our broadcasting a lot this morning. Tomorrow, Tuesday, we'll get UK unemployment data, Germany's ZEW survey, so some macro inputs. That doesn't stop there. Wednesday, we'll get UK CPI and bumper earnings from some big tech players. So Tesla and Alphabet are going to be reporting over in the United States. So the middle of the week, we certainly have a big tech focus. What does Chinese competition look like is an area we will explore further. The ECB delivers its rate decision on Thursday, and on Friday we'll get back to the data with European flash PMIs plus UK retail sales figures. Thinking about the UK, let's focus in on that theme as we bring this hour to a close. Andy Burnham set to become the country's 7th Prime Minister in just over a decade. As incoming leader, he'll inherit a range of social and economic challenges as a number of questions about his cabinet and policy direction remain outstanding. Lizzie Burden is on the beat trying to discover the answers to many of these questions around his top team, around his policy choices. Lizzie, what do we know then about Andy Burnham's economic policy and who will be Chancellor? All of these very unknown right now.
Yeah, me and the rest of the world's press, Anna, it's absolutely heaving here at Downing Street. Literally journalists on top of journalists stacked here in the street, waiting for the turn of prime ministers behind that black door. But in terms of the economic policy, look, Burnham said that he's going to stick to the 2024 Labour manifesto because, of course, he's a takeover prime minister, and that means that he's bound to the fiscal rules set out by Chancellor Rachel Reeves. He's got to commit to the triple lock, which guarantees an annual rise in the state pension, and it means, most importantly, he's hindered from pulling the three main levers of tax: income tax, national insurance and VAT. So that's a difficult fiscal squeeze. He's also got a bleak economic backdrop. We report that Treasury officials, once he goes through that door, are going to hand in some updated forecasts that show lower growth, higher inflation, oil potentially going as high as $150 a barrel because of the Iran war, and therefore higher interest rates. So a lot to deal with for his new Chancellor. The front runner at the moment appears to be Shabana Mahmood. That reported by the Financial Times. You saw the market soothed by that report, and indeed our Markets Live Pulse survey showed that Ed Miliband, the alternative, the Energy Secretary, was the least market-friendly option. Only 5% of votes going to him, but Mahmood only getting 11%. There could yet be a surprise when it comes to who's going to be the Chancellor. So seeing will be believing when the appointments start walking down Downing Street later on this afternoon.
And what else is in Andy Burnham's in tray then, Lizzie?
Well, he'd like to focus on the domestic. Wouldn't all prime ministers, but particularly him as former mayor of Manchester. But of course, the foreign agenda is going to grab him, particularly Donald Trump, and a huge question about what his relationship will look like with Trump. Starmer known for his softly approach to the White House, but Burnham says he's going to be more upfront. A huge question initially regarding the US-Iran war is Burnham going to allow that continued use of British air bases if the US starts striking civilian infrastructure? So there's that. There's also the real desire to focus on devolution for Burnham, and then there's all the problems that plague the welfare reform question, the fiscal squeeze, immigration, all of which he needs to solve before the next election.
Yeah, absolutely. Starmer showing that even with a big majority, getting your will through Parliament was not easy. Lizzie, thank you. Bloomberg's Lizzie Burden. Guy will be speaking to the Boeing CEO, Kelly Ortberg, at 9:15 a.m. That's coming up in around 20 minutes, just less than 20 minutes. So do stay tuned to Bloomberg Television for that. That is it for the opening trade. The Pulse is up next with that important conversation. This is Bloomberg.